Welcome back. FHA Commissioner Julia Gordon reaffirmed the agency's commitment to the HECM program in her keynote address to the National Reverse Mortgage Lenders Association, or NRMLA's, annual meeting, which was held in Nashville, Tennessee last week. Reverse Mortgage Daily's Chris Clow reports that in her opening remarks at the event, Gordon detailed how her husband's recent birthday brought to mind a specific reality. In fact, this year he turned 65. That makes him part of the approximately 1 in 6 Americans who are 65 or older, said Gordon. I bet most of you know that in 1988, when the HECM program was created, that proportion was only a little more than 1 in 10. This demographic shift helps to illustrate the fact that America is an aging population. That's 56 million people now who, as this room well knows, own over $12.2 trillion on home equity. But far too many of our seniors are not okay, being not financially okay. In fact, many of those nearing the traditional retirement age of 65 here in the U.S. cannot afford to stop working. And then there's mounting costs related to care later in life. That could put many in danger of losing their homes. But those realities also help to illustrate the purpose of the home equity conversion mortgage program, she said. Of people who have homes, we also know that practically all of them, at least according to some statistics I found, 92%, want to age in place in their own homes. And helping seniors who want to remain in their homes for as long as they're able to is what FHA's home equity conversion mortgage is all about. Now, that economic reality underscores FHA's commitment to the program. That's why I want to say on the front end clearly, once again, this year, as I did last year, that we in FHA are fully committed to the health, stability, and the broad availability of the HECM program, and that was greeted with applause throughout the room. Gordon also noted FHA's commitment to work alongside industry stakeholders to navigate successfully any changes in the future. And she explained that means that FHA and HUD examine HECM policy with a very precise lens, while also seeking to find solutions that Gordon calls a win-win-win. That means what makes the program work better for lenders, for borrowers, and for FHA all at the same time. And I'm always looking for those changes, said Gordon. We believe that the changes that we've made to the program in just this last year, more particularly things like the changes to the assignment claim process and also changes to the required documentation, we think that those have increased efficiency for both lenders and for FHA and also directly address the liquidity challenges that our industry faces. Finance of America Companies, or FOA, is now expanding their second lien reverse mortgage through their direct-to-consumer division and also through its wholesale partners. This will make the loan option available to more homeowners who are 55 and older. Now, that announcement was made just last Monday. Finance of America notes that while home price appreciation has climbed in recent years, many older homeowners are now unable to benefit from those home equity gains they hold today. Refinancing in traditional home equity loans are not as attractive due to higher interest rates, and selling a home may not be feasible due to the increased cost of buying or renting another home. Finance of America's Home Safe Second loan allows eligible homeowners 55 and older to tap in or access a portion of their home equity via a second mortgage without adding any new monthly mortgage payment. Now, this fixed-rate reverse mortgage loan does not impact the first lien mortgage, neither its balance nor its rate, and there are no monthly payments required on the second lien. Finance of America says the borrower, though, must continue to make their payments on the first lien mortgage, of course, and must maintain their property tax and insurance payments, something that we always disclose in the HECM program. Beginning in November, the Home Safe Second will be offered through Finance of America's direct-to-consumer division, AAG, which they recently acquired, with their advertising reaching more than 20 million consumers annually. Today's market conditions are uniquely challenging, and innovative financing is needed to fill gaps between consumers and traditional loan products. This is especially true for homeowners 55 and older who are not well served by typical home equity solutions, despite home equity generally hitting record highs, said Kristen Seifert, president of Finance of America. She also added, "We're proud to address that gap with the Home Safe Second and help retirees and pre-retirees access their wealth tied up in their equity without adding a new monthly mortgage payment to their cash obligations." And that's very key. Now, currently, the Home Safe Second is only available in the states of California, Colorado, Connecticut, Florida, South Carolina, and Texas. But the company does expect to expand the product's availability in more states in the future. This next story will be welcome news for those of you originating HECM for purchases or planning to. On October 24th, the Department of Housing and Urban Development published a letter to the Federal Register, and it announced a proposal to include more acceptable contributions, including seller credits for the HECM for purchase loan. Now, shortly after the creation of the H4P program, Mortgagee Letter 2009-11 was released, and it required borrowers to satisfy their monetary investment using cash on hand or cash from the sale or liquidation of assets, typically the home they sold, or certain additional funding sources that were very strictly defined in the handbook. Now, the provision of this mortgagee letter in 2009 in effect prohibited certain funding sources from the borrower's required monetary investment, and chief among them is cash or its equivalent in whole or part received from the seller or any other person or entity that is financially benefiting from the HECM transaction, or any third party or entity that's going to be reimbursed directly or indirectly by the seller or any other person or entity that financially benefits. So what we're seeing here is a sea change in the HECM for Purchase program. Personally, I think it'll open up some doors. Now, additionally, that mortgagee letter prohibited seller contributions in 2009, known as seller concessions. Now, seller concessions were defined as a use of loan discount points, interest rate buydowns, closing cost payment assistance, builder incentives, gifts, or personal property given by the seller or any party that was involved in the HECM for Purchase transaction. By expanding the list of permitted interested party contributions, today FHA is moving more closely to align the HECM interested policy contribution policies with its traditional or FHA forward mortgage programs, and that meaningfully increases the source of funds available for a HECM for Purchase borrower to satisfy the capital requirements or down payment required on the HECM for Purchase. Now, the Commissioner is using her authority under HUD through the notice in the Federal Register and is informing the public and program participants of these proposed changes to FHA's HECM program, which HUD does intend to make effective in a future update to HUD's single-family housing policy handbook. And we are definitely waiting for that day to come. Now, for the HECM for Purchase program, FHA will permit the use of a, quote, interested party contribution or seller contributions up to 6% of the sales price. Interested party contribution will be defined as any payment by an interested party or combination of parties toward the borrower's origination fees, other closing costs, including any items paid outside of closing, prepaid items, and discount points. Now, the 6% limit may be applied toward, but may not exceed the cost of origination fees, other closing costs paid outside of closing, such as credit reports and appraisals, prepaid items, discount points, interested party, and permanent and temporary interest rate buydowns, and also the payment of the upfront initial mortgage insurance premium, the FHA MIP. FHA is soliciting public comment on this proposal in the Federal Register through November 24th, 2023. And that concludes another episode of HECMWorld Weekly, our video edition. Leave your comments below and let us know what you think about these stories or what you see developing and how you feel about the HECM for Purchase program now allowing seller concessions or contributions. Also, be sure to share this video on your LinkedIn profile. We appreciate each of you that continue to do that. Be sure to subscribe to our YouTube channel. That way you never miss an upcoming episode of this podcast or our Monday Industry Leader Update or our Friday's Food for Thought as well. Thanks so much for joining us, and be sure to return next week for more reverse mortgage news. Whether you're at your desk or on the go, we have now both a video, obviously, and audio edition that you can choose to listen to. Have a great week.